Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Markets Today. We're starting off another week. Although on a somber note, we are seeing that the markets are trading in the red, although off the low point of the day. The Sensex still is down by about 400 odd points. The Nifty also is trading below that 17,200 mark. Of course, overnight, the cues that we got from, the Wall Street and then in the Asian markets, it has been an all across the board kind of a weaker start for this new week. And that's what exactly you're witnessing in the Indian markets as well. It was the strong US jobs report that strengthened the case for Federal Reserve's persistent, aggressive rate hike path. And that is something that has derailed the stock markets from their, higher path and the uptrend that we were seeing in the previous week. So to understand how the markets will move forward from here, and especially back home, domestic earnings season will kickstart today with TCS reporting its numbers. So how should you be trading that stock? That also will be the focus of this session. Joining in with me is a very special guest right here. Mr. Kranthi Bathini joins in from Wealth Mill Securities. Welcome, sir, and thank you so much for taking the time out. Well, first, your take on the markets. We have started on a weaker note today. Your thoughts on the way the markets will move, especially with the earnings season kick-starting today.
It's actually one thing we need to look into the market. It's a very interesting theme that's emerging from US market. In your initial introductory comment, you said that the good news that came from US, but it is perceived for the market as a bad news.
Yes.
Right now, what is perceived as a good news for the economy is perceived as a bad news for the equity markets. So these are the interesting movements as the economy gets strengthened further. The Federal Reserve is ready to increase the rate hikes in a much more aggressive way. That's what hurting the market. But coming back home, Nifty is holding 17,000 levels, which is very crucial for the market sentiment. As long as Nifty holds that crucial support level of 17,000, we need not have to worry. Okay. Markets are in a very good consolidation, and also it gives a good trading opportunity for the traders in the medium term right now.
Absolutely. It's like how I pointed out, from today, all eyes will be on the earnings season, which kickstarts today with TCS and then the other IT majors also reporting their numbers this week. But this year, 2022, has not been very good for the IT space. Now, looking at the current quarter's earnings, your expectations on the earnings from the IT basket and especially from TCS?
Two parts, Sakshi, to divide your question. The first part is IT was one of the outperformer when you compare on a longer term basis.
Yes.
Of course, 2022 was a year where unusual things happened in the market. That is a saga of exodus that happened. The FPIs withdrawing from the Indian market in the first quarter of the calendar year, and also FIs have been the net sellers always. So IT is the stocks which was owned by FPIs on a majority basis. So we could able to see some kind of underperformance because of the FPIs exiting majority of the IT stocks and majority of the Indian markets. This caused some kind of a knee-jerk reaction with respect to the IT is concerned. But right now, because of the news that we are getting from US and also the correction in NASDAQ, that created extra pressure on IT. So on a longer term basis, I am overweight on IT, and for the investors who are thinking as an India story, IT is one of the space in Indian investor has to be. Coming to the short term basis, of course, the result season kickstarts from TCS today. What we expect from TCS is a moderate kind of returns, but on a quarter-on-quarter basis, we can see improvement in terms of the margin, and also we need to see how the new the guidance going to coming for TCS in the coming next at least 2 quarters, and also what is exactly the things that are happening in US. One side is economy is getting a little bit strengthened, and how it's going to have impact on their margins going ahead. So overall, if we see the initial reaction today, despite of market is down, TCS is in a positive territory today.
Sure, so absolutely.
What we can sense from the initial market reaction is we can expect a positive results, and we need to look forward for the guidance and also how the improvement of the margin for TCS is concerned going ahead.
Okay, so positive expectations from the earnings from TCS this time around, especially on the margins front. There could be an improvement, the revenues and the profits as well. But how is it likely to impact the share prices, just like how you pointed out, the stock is up despite the overall weaker sentiment in the street today. About 1.4% uptick is what we're seeing on TCS. It's trading somewhere in near 3,100 rupees per share. But remember, in 2022 so far, we have seen that the stock, in fact, has been on a decline. It's declined 20% so far. The 52-week low was 29.26, although it's come off that level a bit. But going forward from here, can we actually expect the stock to move towards its 52 weeks high? Can this result really help the stock to, go back to the upward territory?
Actually, if we see on a year-on-year basis, okay, TCS outbeats and it keep on surprises the investors. Probably a couple of quarters it might underperform, but on a longer term basis, it always outperforms the market. That is the tendency of the nature of how TCS moves. So I educate investor, any investor looking forward for the capital protection, looking forward for a moderate returns, and also a conservative investors, TCS is the stock to be in their portfolio. We have a target price of on a conservative basis, the 3,700 is the near-term target for the stock from our side. So any dip we avail to enter into the stock, accumulate TCS for an investment basis in a medium to long term.
Okay. Help me also understand, for all the viewers' benefits as well, what are the things they should watch out for in the earnings? There's also a talk about the company perhaps declaring the second interim dividend. Can that be another added-on advantage for those looking for an opportunity to enter into stock at this point in time?
Definitely, Sakshi. Any dip, and also investors can take the advantage of dividend also. But predominantly, we need to look forward for the macro things that are going to come out in the commentary from the management, and also we need to look forward how the management guidance for next couple of quarters we need to look forward.
Okay, so the management guidance on demand, on the client deals, the deal pipeline, all of that will be important to track. But definitely, if there is a dividend announcement, then that could be an added-on advantage over the long-term view. There is a positive territory that the stock could be moving into, and any dips could be bought into, just like how Mr. Bathini pointed out. 3,700 is near-term target on TCS going forward from here. Thank you so much, Mr. Bathini, for being with us and sharing the insights on markets overall and on TCS as to how to approach investors, how should investors approach this stock right ahead of the earnings today.
Thank you, Sakshi.